How to fail a CRA audit. Hello everyone, my name is Sylvia Ho and I'm a financial landlord consultant. I work solely with landlords to help them save money, reduce the taxes that they pay legally, and save interest paid to the banks. Over the last 2 months, I've had constant conversations with landlords who are doing the same mistake over and over and over again, and they risk a CRA audit. So what are they doing? And I will also talk about a solution. Every single week I do live training just like this. If you like what you hear, please comment below. If you're watching this on YouTube, please also subscribe to my channel. All right, so these past few months I've been talking to a lot of landlords and I am seeing a common theme, and you are not allowed to do this because you will absolutely fail a CRA audit. So what a lot of people are doing is this. They have a primary home, an owner-occupied home, and they have a, let's just call it a $500,000 mortgage. And then they have a rental property with a $300,000 mortgage. And they've owned this rental property for quite a few years now. They have been claiming the rental income. They've been deducting the interest costs, and their mortgage is up for renewal. And then they're like, oh my goodness, why don't I do this? Why don't I refinance the rental property? There's so much equity in there, and pay off my $500,000 primary home mortgage, and then I'll be mortgage free. What a great idea. Wow. So many people are doing this, and I'm telling you, my friends, stop doing it because you will fail a CRA audit. So what's going to happen, what this landlord is thinking about, what these landlords think about is they're going to take their primary home mortgage, they're going to pay down their $500,000 to zero, and then on their rental property from $300,000, they're going to increase it from $300,000 up to $800,000. And they're like, yes, I'm going to deduct all the interest costs on the mortgage, and now it's sitting on the rental property. I'm going to have more deductions, and therefore with more deductions, I'll have a lower net income, and therefore I'll pay less income taxes. This is exactly what you're going to do to trigger a CRA audit. Because CRA is not stupid. They didn't start yesterday, right? What will happen is this. They'll be like, hey, you know what? You have been claiming interest costs of X amount of dollars. And all of a sudden, this past year, you're suddenly increasing your interest cost deductions. What happened? Did you do a large renovation? Why are the interest costs higher? And then what's going to happen is you're like, well, my mortgage was at $300,000 and now it's at $800,000. So I'm deducting $800,000, the interest cost on $800,000. And that's why they're like, oh, okay, sure, no problem. You can do that. But what did you use the $500K for? Oh, I used the $500,000 to pay off my personal mortgage. You cannot do that at all. Once you tell CRA that you took the $500,000 and you paid off your personal mortgage, all the tax deductions on that rental property will be null and void. And they're going to ask you back for any tax refunds and any tax deductions. And it opens up to more audits for all the previous years that you've been doing this. So what is the solution? If you were a landlord that used the equity in your rental property to pay off your primary residence, well, the solution is what I call mortgage. It's called a mortgage reset. Okay. What does a mortgage reset mean? A mortgage reset means we got to reverse everything that you just did. We got to take the rental mortgage of $800,000, we break it, we take $500,000, we put it back onto your primary home mortgage so that you're back to $500,000 on your primary home, $300,000 on your rental property. And then you deduct the interest costs. And then this means that you've reversed everything that you've done. You don't claim the full or higher interest on the $800,000, and CRA is going to be okay with that. Second thing, if you're thinking about doing this, please, 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 my friends, go talk to your accountant. Say, hey, accountant, am I allowed to do this? And I guarantee you, your accountant will go, no, 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 no. You cannot do that at all. You can't take the equity on your rental property, pay off your primary home mortgage, and expect to deduct the interest costs on the $800,000. Now, here is what you can do. if you had a $300,000 mortgage on your rental property and you wanted to increase it to $800,000, you took that $500,000 and you went to go invest it with a reasonable expectation to generate income, yes, you could absolutely do that, and you could deduct the interest costs. There's a very specific way in doing this. So $500,000 and $300,000. So you can deduct the interest costs that way, but you can't take the $500K and pay off your primary home mortgage. So what I did for this particular landlord is we are doing a mortgage reset. A mortgage reset means that we take the $800,000, we split it back up again to the original portions, $500,000 and $300,000, and now we start deducting interest costs on $300,000. But you have to remember, what is the main purpose of why this landlord wanted to do this? They wanted to pay off their primary home mortgage faster. There is a solution to that, a legal solution to paying off your $500,000 mortgage much, much faster than planned. And that's called rental cash dummy. This is an advanced financial strategy where I can show you how to pay off your primary home mortgage, your $500K mortgage, 8 to 12 years earlier than your current plan. So with this particular landlord, we're doing the mortgage reset. Now they have a $500,000 mortgage on their primary home. They're like, Sylvia, I really want to pay this off. With this particular landlord, they wanted to pay it off prior to retirement. They wanted to pay it off in 20 years. So we put together a plan, a 20-year plan, despite them being on a 30-year plan. So with rental cash damming for this particular landlord, we were able to shave off 10 years off their primary home mortgage legally. Rental cash damming is a legal strategy that is allowed that is approved by CRA. CRA actually wrote the law on how to do rental cash damming, but they don't actively promote it because they actually lose money on it. So if you'd like to learn more about what this mortgage reset is all about, please comment below mortgage reset, and let's book a time for us to chat, for us to have a complimentary strategy call where I'm like, okay, what happened here? What's going on? Let's figure out how to do a mortgage reset and get rid of that $500,000 primary home mortgage 8 to 12 years earlier than planned with an advanced strategy called rental cash damming. My name is Sylvia Ho, my friends. I am a financial landlord consultant. I'm also a mortgage agent. I have been working with landlords for the last 25 years, and I specialize in saving landlords money, taxes, and interest. If you love what you hear for weekly training, please comment below. Please love this Facebook Live, this training, and subscribe to my YouTube channel. All right, my friends, take care. Bye now.